bunch of dangerous myths that circulate around about all kinds of investment classes, most particularly real estate. We're going to be talking about those in the coming weeks, so this is the first one we're doing on debunking real estate myths. Okay, myth number one is that mortgage insurance is a good idea. It's very much a bad idea. Universally, it's a bad idea, and there's two reasons why. If you think about it, you're paying the same amount of money over time, and although your mortgage drops in value gradually and slowly, the benefit that you would get, because all that happens is your mortgage gets paid off, declines over time. So you're paying the same amount for a decreasing benefit, which is a terrible investment generally. Second, and most important, the financial institutions, the Canadian banks that sell you mortgage insurance have been really good at collecting premiums, but they've been pretty awful at paying out if it comes to that. So they've been kind of duplicitous, and I don't recommend mortgage insurance. Avoid mortgage insurance like the plague. Myth number two is that rent is throwing money away, and buying and paying down a mortgage is actually good. If you honestly evaluate the cost of renting versus owning, and you take into account property taxes and renovation costs, it may very well be that renting is actually less expensive than owning a similar property. You have to be honest with yourself and figure out, given the value or the price of real estate at the moment, is it better to rent or is it better to buy? And to back up this claim, if you just look at an amortization table, for the first 10 years of a mortgage, or 14 years I think it is, you're paying nothing but interest on your mortgage, and so it's not like you're building any equity with it. So in a sense, you're throwing money down a rat hole when you own, but you also have the joy of paying property taxes and renovation costs along with it. So again, honestly evaluate whether renting or buying makes sense at any given time. Myth number three is that renting is cheaper than buying. See what I did there? I said before that it's probably a good idea to rent versus buy, and now I'm saying that it's not always the case that renting is cheaper than buying. The fact of the matter is that you can't come to a conclusion, however comfortable that conclusion is, and then turn your mind off for 30 years. You have to be willing to accommodate new information as it comes to you. These are dynamic systems, and although rent may be great now relative to buying, it may not be the case in the future. So if prices drop in Toronto, say 40–50%, it's going to at that point be great to buy relative to renting. So keep your minds open and don't come up with a rule of thumb that you have to adhere to for the next 30 years. Myth number four is that remodeling your home creates value. Now, doing structural repairs on your house, like repairing the roof or repairing a cracked foundation or something, might be a good idea because it'll stop you from destroying value, but remodeling your house for aesthetic reasons actually doesn't create a lot of value. And an example I'd use to sort of point this one out is the idea that I think it was like 5 or 6 years ago, everybody was putting in cement countertops. The tastemakers at Architectural Digest were saying cement countertops are all the rage, everybody's getting a cement countertop. Now imagine you put $10,000 into putting up a cement countertop back in the day, and you want to sell your house now. That thing is actually, from the point of view of the buyer, it's a pain. I mean, it's ugly, it's ridiculous. They're going to have to get rid of it, and actually it's causing the price of your house to drop in value. So some of the aesthetic renovations that you're going to do don't actually create a lot of economic value. That doesn't mean you shouldn't do them. I mean, there's lots of reasons to renovate something, but just know that it's not an investment. It's really just about appealing to your own taste. Myth number five is that they're not making any more land. I love this one when I hear it about real estate investing because it is such a silly myth. It's technically true that there's not any more land being spontaneously created on planet Earth, but the fact of the matter is that this isn't an argument in favor of real estate investing. There's a great book that I read a couple of years ago called The Triumph of the City, and the author of that book made the point that we could fit the entire population of the planet in the state of Texas. Yeah, it's true that we're not making any more land, but there's such an overabundance of land that it doesn't really add anything to the pro-real estate argument at all. Myth number six is that buying a home will build wealth over time. Now, admittedly it has over the last 15–20 years, but again, like I was saying before, just because something's happened in the past doesn't mean it's going to keep happening in the future. The fact of the matter is, those things which drove the price of real estate and the creation of wealth in real estate is increasing prices. It's not like people have made money on real estate by paying down mortgages aggressively, quite the opposite actually. And what goes up in price inevitably comes down in price. And so you can't take it as given that buying a house is going to create wealth. For example, right now if somebody buys a $100,000 house with a $20,000 down payment, they've got $20,000 of equity in that thing, it can, the price can drop just as easily to $90,000 for example, and you'd lose half your equity on the house. So don't assume that just because you bought a house, you're going to create wealth with it. Just because it has over the last 15, 20 years. The next 15, 20 years, it's likely to actually do the opposite of that. Myth number 7 is that buying a home is safer than other forms of investment. Now, this one deserves an entire series, but I'll try to be as succinct as possible. Now, it could be that buying a home is a safer investment than stocks, for example, certain stocks, but it could be a lot more dangerous. And by a lot more dangerous, I mean a lot more dangerous. Because of the effect of leverage. My own example, or an example from my own life to demonstrate my point. So when I bought my house, I bought it in 2000, and I made a 10.5% return, price on price, until I sold my house in November of 2012. That seems like a good return, but it doesn't take into account the property taxes I paid and the many, many renovations I made. Over the same time that I owned my house, when I made 10.5%, an institution that was selling people mortgages and selling people the idea that real estate is always great, the Royal Bank, it actually made a 13.5% return over the same time and paid people dividends 4 times a year along the way. The idea that real estate is a safer investment than any other investment is just a silly one, and after maybe 5 minutes of investigation, you'll see that it's not, in terms of its performance and in terms of its safety and diversification. Now, am I saying that all stocks are better than all real estate? No, absolutely not. A point that I want to make repeatedly is that it's very dangerous to make overgeneralized statements. There are certain stocks, and you can find out about others when you watch this channel in the future, that are terrible investments and are probably going to be terrible investments for the next 5-10 years. And there's certainly real estate that's better investments than the Royal Bank was. And I'm certainly not advocating anybody buy the Royal Bank. What I am saying is that in the main, you can't make the claim that real estate is an inevitably better investment than any of the other things that move up and down in price on a day-to-day basis. The reason we can't say that is we feel real estate is a safer investment because we can't see its price changes on a minute-by-minute basis. And that causes us to anchor on the volatility in the price of a stock, for example, over time, whereas we don't pay so much attention to the weekly or monthly or even yearly price changes in real estate. So that gives us the illusion that it's safer, when in fact it's no more safe or less safe in general than any other asset class. The 8th and final myth that I want to talk about is the idea that if you own your house, your costs are going to be constant, unlike a tenant who pays rising rents every year. Anybody who's owned a house for more than 10 years or owned an older house knows that the longer they hold it, the more they have to repair it. As a house ages, the rate at which you need to renovate it, repair it, increases over time. So that's the first thing. The second thing is our tastemakers, again, Architectural Digest, I'm looking in your direction, say to us that, well, the marble backsplash you put in 3 years ago was great, but everybody's doing granite now. So, or, pick your poison in terms of trends and fads that we follow, for our cosmetic desires to keep up with some view of what is good taste. And so the costs associated with owning a house are actually arguably much greater, especially when you overpay for real estate as people are doing now. So that's pretty much the 8 myths. Thank you very much. I look forward to any comments or any questions. And if you disagree with my point of view on any of this, I look forward to a friendly debate online. Thank you very much for watching.